name is Sean Rusin. I'm the co-founder of the Osisko group of companies. First company was Osisko Mining 1. We found and built the Canadian Malartic mine, now owned by Agnico, a 700,000 ounce a year producer. And also out of that we created Osisko Gold Royalties when we sold that in 2014 for $4.1 billion to Agnico and Yamana. Osisko Gold Royalties, I ran that till 2022. That company is now worth about $5 billion. We have several other things in the industry named Osisko, as a lot of people know. But today I'm going to talk to you about Osisko Development, which is the one that I'm heading up again, as we're focused on our flagship asset here in British Columbia. The flagship asset is the Caribou Gold Project, located in the central British Columbia in the town of Wells, about 45-minute drive outside of Quesnel. The big story on ODV this year, we received our mining permit and our environmental permit to build a 4,950 ton a day underground mine on the historic Caribou Gold Project. We've done about 800,000 meters of drilling into it, and we've also given quite a bit of effort to the exploration on a regional basis. We own over 2,000 square kilometers of mineral rights in the area, about 500,000 acres. And we've discovered mineralization that's similar to what we're working on for the mine plan, over a total strike length of 83 kilometers. So in terms of what we're accomplishing with this is a regional play. We think that this ends up being multiple mines along the way, with the first one being Caribou Gold Project, which we have a strike length of about 4.6 kilometers. The feasibility that we put out in 2023 calls for about a 220,000 ounce a year mine off the back of 5,000 tons a day of underground. As I said, we received that full permit in November after a 4.8 year permitting process. So, it's one of the rare moments in sports history where I have exactly what I like to start the day with, and to open 2025 is we have a gold deposit, we have plus $100 million in the bank, and we have a permit, a rare thing in our space. So I think that if you look around what's going to be getting valued in 2025 with the dawning of the Trump epoch in the US, and probably a North American boom that comes with it, we will see this project should move up the food chain in terms of valuation now that we are fully permitted. We received that permit in November, so haven't really seen the value of that permit come into the valuation of this company. It trades at about a $330 million market cap right now. So with $100 million of cash in there, it's the deposit, which is an overall deposit of 2 million ounces of reserves and another 3.3 million ounces of resource. In all categories, 5.3 million ounces. And that's only down to a depth of about 350 meters or 1,000 feet. So it's a pretty significant start to the day, as I would say. In terms of what we've been able to do with that, we are underground right now. We've driven about 1,200 meters or 1.2 kilometers of underground tunnel in the last 12 months. We're going to be shooting a bulk sample this week of about 7,000 tons. And as we get further into the week, we'll start to ship some of that material to Saskatoon, to the Center for Excellence there for another optimization on the ore sorter technology, which is one of the metallurgical processes that we've involved in this project. But we're seeing significant mineralization up and down this. So we've put 800,000 meters of our own drilling into this project. So it's a very significant database. And the resource that we've identified was not really sought after in the historic drilling. There was the previous operators that were there. They were focused on the replacement deposits that were higher grades, sort of 15 to 25 grams. We focused on the low-grade bulk tonnage aspect of this. And the mineability is very, very, very large deposit with a lot of continuity. And on a vertical basis, we've been averaging between 1.5 and 2.2 million ounces for every 100 meters that we've gone down on the smaller footprint that we're in right now. So on the evolution of that, we will be picking up the drilling now that we have the permit. We will be drilling at depth down to about 1,000 meters. So if you were to project at 1.5 to 2.2 million ounces for every 100 meters down, if we can go down to 1,000 meters, you can see the significance of this project. We've had the privilege of having had several wins. As you may know, our sister company, Osisko Mining 2, just got sold to Gold Fields for $2.16 billion. Osisko Royalties, now $5 billion, and Osisko Mining 1 went for $4.1 billion. And we also have Osisko Metals, which has the Gaspé porphyry copper system. So within our group, we've developed a lot of expertise about brownfield evolution, and we're sort of been ticking off the box and taking risk off the table as we daylight the value of this project. 2025 should be the breakout year for this asset. And as we get further into it, the exploration on strike, there's another 10 kilometers of well-known mineralization with drilling into it directly adjacent to us called the Proserpine. And there's an overall of 83 kilometers of strike length that we will reinvigorate the exploration on as we get further into 2025. So expect this to be a mining camp. We're building a central process facility that can handle 5,000 tons a day. But as we get further into it, hopefully more mines around the area, that will become a central processing facility. And as things go on, this will become a major mining camp in the gold space. Historically, from placer mining and underground, there's been over 4 million ounces mined in this area. It started as the reason that BC was in the Confederation in 1858, and it was the largest town north of San Francisco from about 1860 to 1910. So we're putting the energy back in this project as we move forward. So expect to see some exploration results, the bulk sample results that we're underway right now, also the evolution with the underground work that we've done so far. In terms of confirming our mining costs, we think this is going to be about $1,000 AISC. That was our 2023 feasibility number. So a very high margin in BC on grid power. We're using Site C dam power, so it's on green power. It'd be a highly electrified mine with very little footprint on surface. And with the ore sorter technology, we avoid a lot of contact water and a lot of tailings disposal. So this will be high up on the ESG score chart for a lot of the operators that are out there. The second project that's in the company is located in Utah, which is the #1 mining jurisdiction by the Fraser Institute in the world at present. We have 17,000 acres of patented land there in what's called the Tintic region. It's about 40 miles south of the Bingham mine, which is the reason that Salt Lake City exists. That is one of the biggest copper gold porphyry mines in the world. We acquired this ground after 12 years of hard work. We have Robert Friedland's Ivanhoe Electric to their southwest border, Freeport to our south border, and Rio Tinto to the north at Bingham. So we're drilling on that target as well. So there's 3 things going on there. There's a big graben. There's 2 big lithocaps that Dick Silito, who's somewhat the godfather of all things in the porphyry model, had identified as the top target in North America, which we spent $200 million to acquire. We also have 5 gold mines historically here called the Trixie mines that were mined about a 5-kilometer long strike length along the eastern border of the Graben. And then we have several CRD deposits. There's 18 previous producers of silver, lead, zinc in the camp as well. So that's going on as we speak. The drill is down about 1,700 feet, so stay tuned for drill results on that, and that goes to the copper theory, which I think everybody in this room has probably got an opinion on copper being one of the big winners in all this. And obviously gold has done its job, and we're sitting at 2,700 Canadian today, or US today, with about 3,900 Canadian. As Mr. Trudeau has done a great job on discounting the Canadian dollar, Canadian gold mines are going to benefit from that lower dollar. Some people have called that the Trudeau peso, but I'm not quite sure I'm ready to lock on that. But as we look forward to 2025 for us and the ability to deliver value to you, the shareholders, we think we've set the table. The asset base is right. The team is right. We've won the Stanley Cup 3 or 4 times in the past. As my favorite saying goes, that nobody ever won the Kentucky Derby, no matter how good a jockey they are, when they rode a donkey. So if you're going to win the race, you have to have a good horse. We've got a couple of them here. And we've got the team that's been here, done that, to get you to where we think the valuation is. At 200,000 ounce a year producer, we would be comparable to something like a Westbourne, $2 billion, $3 billion. If this good thing continues to scale, we would be looking to join the ranks of the 400,000 or 500,000 ounce a year producers, which all trade north of 10 billion Canadian. So that's our goal. That's what we're trying to get done. And hopefully we'll see you out there. We're at booth 234, I think it is. If anybody wants to get further detail or catch up with us, we'll be around all week. Thanks very much, everybody. Good luck with your investments.